Boom shakalaka, the true cause for Bitcoin stagnation, the one sign to look out for, and a big Bitcoin what if. Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, a lot of very interesting charts for Bitcoin and cryptocurrencies, including the real cause of the stagnation. A lot of other interesting charts. This divergence that you need to see, and the one signal that will end it all. Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us on Twitter at @Crypto push that like button. Now, today, fear and greed, 41, down from yesterday where the price popped up, came back down. The overall price, guess what? Sideways. How about that? Bitcoin at 25,862, Ethereum at 1633, BNB at 214, XRP 50 cents, Dogecoin 6 cents, Cardano $25, Solana $19, and Tron 7 cents. And Bitcoin right now in this wedge, which will break out by October 10th. But there's a much bigger thing going on right here. This cross happening between the 50 and 200-day moving averages. The last two times this happened, this is exactly what Bitcoin did. One, Bitcoin went up. The other, Bitcoin went down. But if you notice in the short term, both occasions, Bitcoin went down, putting Bitcoin between the $20,000 and $22,000 range at this time. So be prepared. I'm not saying anything is going to happen, but be prepared. It appears like Bitcoin found resistance on its on-chain mean or active investor price, this green line. You can see if we make the green line straight, this is what Bitcoin does around it. Now, historically, when Bitcoin does break above there, generally it pops off parabolically. Right now, we just need to get through that active investor price. Despite that, Bitcoin is still retesting this previous trend line that was support back here, a little bit of resistance and support again, similar to what we saw in 2019. Once retesting, it took off for much higher highs. This accumulation phase will not last forever. As a matter of fact, according to this chart and the Chaikin money flow, it's due to end by the end of the year. So if you're looking to scoop up Bitcoin, yeah, the price may go down, you may get a better discount, but you better start collecting now because by the end of the year, it will likely be over. We can also see in this chart right here, also showing that the accumulation phase is ending. You can see as this curves and goes to a slope of 0, eventually that's where the change occurs from accumulation to distribution. Right now, we are pretty much at that slope of 0. So that would mean that likely we would be heading in towards a distribution phase coming up pretty quickly. A lot of people calling for the bottom, and it's pretty evident the bottom is in. If we take a look at Bitcoin's correlation to the Chinese 10-year, which has picked out the bottom of every parabola, we had a crossing of the 10-year and its moving average. Also, the TSI and the volatility index all crossing, suggesting the bottom was way back in June, and we are headed for a parabola. This chart here as well, very close to a breakout here of the trend line for Bitcoin. The RSI, the WTLB, and the DSS presser all suggesting that the bottom is in and we are headed towards higher highs. As a matter of fact, Bitcoin loves descending broadening wedges, or maybe it doesn't know anything about descending broadening wedges, but I love Bitcoin's descending broadening wedges because this is how Bitcoin interacts with it. Check it out. Goes down, goes down, goes down, eventually breaks out, retests it, and takes off gigantically. Look at this. Well, where are we right now? Descending broadening wedge, broke above, retesting it right now before taking off to levels we haven't seen. Now, what's going to cause that? How about this right here? As Bitcoin continues to fluctuate around $26,000, an interesting trend emerges. This is a divergence you need to pay attention to. Around 500,000 new Bitcoin addresses are being created daily. Yeah, that's right, 500,000 new addresses a day, representing a new yearly high. You can see how this has taken off dramatically recently. For those unfamiliar, this suggests more people are showing interest in Bitcoin, even if the price has seen recent drops. For long-term investors, this growth and participation can be seen as a positive sign of sustained interest and trust in the network. This is a divergence. Price can go sideways, but as interest grows, well, eventually demand will grow as well. As a matter of fact, this is the indicator you need to keep an eye on. OBV, one of my favorite indicators, because it is not a lagging indicator. It actually gives us a heads up before Bitcoin moves. you can see when we have these breakouts of OBV downtrends has called every significant pump for Bitcoin, most of them at the exact bottom. Well, check this out. Very, very close to breaking that downtrend. That is absolutely something you want to keep your eye on, because what if this were to happen? Next 5 to 10 years, Bitcoin appreciates but stays in the 5 to 6 figures, not $1 million, as bank paper Bitcoin takes demand away. But eventually, in the 2030s, so have a little bit of forward looking, exchanges finally depleted and insolvency shows so many banks fail, and then hyperbolic Bitcoin goes into hundreds of millions as supply gets exhausted. Yes, make sure you own your own Bitcoin and not leave it on exchanges. Everyone thinking in the 2020s that Bitcoin is done at $400,000, but it could go much, much higher when the fireworks begin. So that's just a little what if for you to end the episode today. If you enjoyed it, push the like button. I'll catch you guys later. Have a good one. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.
From now on, if you don't own Bitcoin, you're a moron.